This is the gold chart that's on a daily basis, and we see that we had a recovery in the gold prices somewhat on Friday, March 23rd, 2012. Today is Saturday, March 24th, 2012. I still think this trend is intact, and I know you could say it's a trend and trends can reverse, but I think this trend is solid for another reason, or actually 2 or 3 more reasons. Same thing with the silver. It had a good day on Friday. Well, I'm actually betting short, so that's a bad day for me. But I think it's going to decline. There might be an up day on Monday. There could be. And I have also noticed, and I've also taken note about usually when silver and gold have these very good days and platinum and palladium don't, sometimes it's the other way around. As long as the market's bullish on the following day, you might see platinum and palladium catch up. And I think possibly for Monday, that might be a good day. I don't know if I'm going to do that, though, because I think the trend is basically downward, and if I was going to try this, it would just be for a day only, to get into either platinum or palladium for a day. But I'm not sure about that. I'm thinking about it. I might do that myself. As far as silver, the downward trend is still intact. I know you could say, it's a chart, it's a downward trend. There's a reason for it. And the reason it's been is like this reversed itself because, right here at the end of February, it reversed itself because they were expecting QE all along here. They've been talking about it since the end of 2011. Then all of a sudden, again, no QE. They expected him to hint at QE. So he's got the power to bring the markets down. That's Ben Bernanke, but I'm not being critical of it because what the heck? I mean, that's just how the system is right now. What do you know that if he says QE, this is going to go up. If he says no QE, it's going to go down. I should have reacted on that word. That would have been smart, but I didn't. I will in the future. So I still think this trend is downward, and there's bad news coming out about China now. And there's a few other tidbits coming out even about Europe. Let me get on with this other thing. This is the euro chart. Now the euro has been going. This is a daily chart. I have it shown in a lot of periods, but it's in a downward trend. It's in a downward trend, and it's been in a downward trend for some quite time. Even though it goes up sometimes, it seems to get into lower lows. So this currency's in trouble, and I still say there's something going on behind the scenes with these debt default insurance, and obviously Portugal and Spain is going to do the same thing as Greece, I would imagine. So there's going to be something problematic with this euro that could probably bring markets down. But what they'll do, and this is when I see a clear solution, when I see the precious metals are going to clearly go up, is when they fix the problem with massive infusions of cash or liquidity into the system. Then I know precious metals are going to go up. Until they do that and they stop, if they're defaulting, we might see the commodities and precious metals go down. Possibly. I think it's got another week or two that's going to go down. But also take note, the euro had a low here at the end of December, around the beginning of January. That's when the commodities were down, and the commodities were pretty much recovering back in this period after the crash in the end of September. But we had a higher recovery in silver than in the euro. And that's telling me, obviously, I know there's not a perfect correlation, but that's telling me there's more serious problems in Europe than they are saying. And before it was a bunch of drama. I didn't think it was going to crash. I mean, before. And I don't think it's going to crash right now, even like they're going to hold it together, but there's going to be more problems coming up. And I remember this time period way back in June of June of 2010, when the euro was about 119 to the dollar. They said it was finished. I knew that was wrong. And also, if you look back at some other times, because I like to get in and review some of this garbage. Back here, in 2008, before the financial crash, everybody was saying buy the euro, buy the euro, and look, because it was going up, it's been going up. That's the currency to stay in to survive. I remember that was very commonly said all over the place, buy the euro, including Peter Schiff. That guy, that guy was saying that too. Besides gold and everything like that. So beware, when the market starts going up like this, you got to watch out. And then you got the correction period. Now, I don't think the euro is in the same category as gold or silver, but it's just that, the advice you get is so obvious whenever there's an upward trend. They're saying, yeah, it's going to keep going up. How do you predict this? How do you predict this? And, I'm thinking that there's going to be a surprise downturn in the commodities still. So I'm holding on to my short position, but I'm not short in all areas, so it's not going to help me that much. It's kind of like a retreat position because I'm bullish on commodities, and I think long range they're going to go up, but I don't want to hold on to a long position on everything because in near-term future I still expect gold and silver to go down. This I found to be a very interesting factoid. China imports half the world's cement and bulk commodities and 1/3 of the world's base metals like copper, aluminum, nickel, that kind of stuff, and soft commodities including agricultural products. So when they have a slowdown, there's a major problem. The recent steep decline in U.S. and European equities show that a slowdown in Chinese growth was not priced in by the markets in Europe and the United States. Until China's growth has reached a bottom, then it's hard to see how commodities and stocks can sustain a rally when the world's second largest economy is stagnating. Now, Mark Farber was kind of warning about this, but Chinese numbers say that the GDP is at 7.5%, and they always want to maintain 8%. Well, I don't know. I don't like quoting Mark Farber too much, and hopefully I'm not misquoting him, but I think he said that he doesn't trust a lot of the numbers coming out of China, and to me that makes a hell of a lot of sense because the population in China puts up with this totalitarian leadership because they promised the population that there's going to be 8% growth every year. So when they come out with 7.5%, it might be lower than that. And there's a couple other things that indicate there's more problems going on. So commodities might not be too good. And where they're going to be good is when they really start coming out with a lot more money printing. And when they announce that, that's when the long position on commodities, gold and silver, will be the correct position to have. Now, this is something Jim Rogers said on Friday, yesterday, March 23rd, 2012. Today's March 24th, 2012, Saturday. Jim Rogers said, to be honest, and this is probably a little bit of a Chinese translation, to be honest, I hope the Chinese markets crash so I could buy Chinese shares. That makes sense. You want to buy stuff when it's cheap. I want to buy palladium when it's cheap. I want to buy silver when it's cheap. I want to buy gold when it's cheap, too. Hopefully I got this in the right way, too. The signal of the slowdown in economic growth immediately triggered a strong reaction of the markets, which was the economic growth of China. All commodities fell because China takes up that many commodities in the world. Also, the two largest economies in the Eurozone, Germany and France, show a PMI break, a primary manufacturers index break, below 50. Now, this thing really has to be above 50 to even to stay even, right, because of inflation stuff. It's really got to be above 50. But when you go below 50, that means contraction. So that is below market expectations, which means a return to recession in Europe, which by the two big ones, Germany and France. So that's a preliminary number, though. Jim Rogers, in an interview, explained point of view. This is probably a Chinese translation because I was just trying to pick out a couple things he said, and I had to leave it alone because it's supposedly what he said, but it doesn't make sense because it's probably not a good, I don't know where the heck, it was probably a non-English writer that picked this up, I guess. But not to be critical, I guess I got the. It says in the past few economic growth slowdowns, they were taking measures to, I guess, the foaminess of the real estate market to slow it down because it was getting ahead of itself and it was a bubble. In fact, I'm very happy to see in China economic growth decline, not only in China itself, but also it's conducive to the global economy for everybody because it means an opportunity. So he's happy to see economic growth's decline in China because he considers that an opportunity for himself to buy stuff cheap. Well, that makes sense. Doesn't come out that way in a translation. I know this guy didn't say this like this. I'm assuming it was a foreign translation. HSBC, Hong Kong Shanghai Bank, PMI the primary manufacturing index preview value went down substantially from the actual value of 49.6 to 48.1, indicating that the domestic economy is experiencing rapid economic decline. New orders index continued to fall and fall faster than new export orders, which indicates that both internal and external demand continued to shrink. I had to pretty much translate most of this stuff I was reading because it looked like it was written by non-native English-speaking writers, and I'm assuming this was the Chinese primary manufacturing index, so it's down. So as the global commodity market buyer, China's economic slowdown is undoubtedly a major blow for industrial commodities. That is a big one. See, they haven't priced this in the market yet because they're talking about this Chinese slowdown for like a year. Now, I want to point out something else. We looked at this. You got to use these numbers, but I'm a little suspect of what's going on here. This was right off of Bloomberg, the J.P. Morgan Global Manufacturing Index, so it includes like Europe, United States, China, everywhere, right? So it went down a little bit. But it's still over 50, right? It's over 51, right? It's still up over 51. But, there's a bunch of numbers now coming out that's saying, if you're looking at maybe the United States might be okay, but in Europe and in China, it's going to bring this whole index down next month. So here it's almost the end of March. So let's assume that this index is going to be down further. Now also the Baltic Dry Index, it's going up, is showing a slight rise, but it's still low. It's still low. So I think the only way we're going to see a reversal in the trend of commodities, gold and silver, is if they clearly indicate that there's going to be quantitative easing. And I think the only thing that's going to do that is some kind of catastrophic problem. Now, it is, like I said, it is kind of difficult to tell from these charts what's going to happen because, I could say there was a low here and there's so many days between this low and maybe, this low may not come into play till April sometime, mid-April, or even towards the end of April. I don't know. But until the news changes, I'm going to keep a short position on gold and silver for a while. I don't think they're going to go up. I think they're going to get hammered. And it'll be unexpected. It'll be unexpected. I think there's going to be some volatility going on here. Now, as far as guessing the markets, if I had to take a guess, I think Monday might show a fairly decent day for commodities in general, because usually this trend seems to take 3 or 4 days to reverse itself. It had a few down days. It had the first up day, and I might take that. I might take that bet on platinum or palladium to go up on Monday also, possibly, if I get in there before it already rose. But I'm not sure about that, and it probably will be a small bet. As far as, any news coming out from China, I think there's going to be more bad news because of this Baltic Dry Index, and we got some preliminary data on the primary manufacturing index from Germany, France, and China, and they all look bad. So this next time this comes out with this global index, which will be coming out probably in a little over a week, it's probably going to be down again. So that's usually an indication that commodities might take a downturn some more. Unfortunately, what we really need in reality is quantitative easing. That's what's going to bring the prices up, and that's going to push the speculators in gold and silver, and they're going to help push those prices up. It's not going to be so much the fundamentals. Eventually the fundamentals will take over, but it's going to have a while yet.